Hello traders everyone, welcome to our new webinar. It's March 4th, Monday, so hope everyone is doing well. Let me know if everything is fine here. Can you see my screen? Can you hear my voice? So if you can please just let me know in our chat room if everything is fine, or here in the chat box. Okay. Okay, so it's now better. My team said that it's a little bit of quiet, so let me know if now you can hear me better, please. Okay, so as you know, I was away last week. I joined on Friday, so I was skiing in Austria. We catch up some snow because, as you know, there's here in Slovenia is each year we have less and less snow, so my kids love skiing, and we went on a short trip for a few days. So during this period, markets did not change much. We know that the FX market is still somehow very slow and trapped in the range. But what was interesting is some sell-off occurred on Friday. Okay, after the US manufacturing PMI data came out lower than expected at 47.8. So this figure potentially could help to bring the inflation lower, and this means that the odds for potential cuts from the Fed could increase, and that's why we were seeing this move to the downside on US dollar. But still, there is not any kind of a major move, but it could be an early stage of a potential weakness. Keep in mind that this week we have potential movers also coming from the ECB this Thursday, and then also the most important should be the non-farm payrolls report and also services PMI, which will be released tomorrow. Okay, so we have some very interesting data. Also, I think that Bank of Canada will decide regarding the rates. You have, let me check, Aussie GDP as well. So I think that we can be very volatile, but until we see some very important shaky moves and surprises, I just think that maybe FX will till then will stay in the range. But still, looking at the US yields, which we are tracking for regularly in our webinars, still very important resistance up here in my opinion. That's a wave B rally. So if we will see a sell-off, then dollar index in my opinion will also come under pressure, potentially back towards 100 level. For now, looking at dollar, it came out of this downward channel. Okay, you can see a pretty nice reversal here from the 61.8%. So I think that this rally is WXY correction. Also, this drop was pretty interesting and quite aggressive. So maybe it's, as I said, could be the first leg of a higher degree weakness. So on the intraday basis, what happened on Friday is that earlier we have seen that market actually found resistance here around 104.30. So actually this resistance occurred after this free wave movement to the upside. Okay, so I think that more weakness here could be seen in the cards in the next few days, few weeks. Maybe we will continue to the downside and even trying to sell off with sharper price action, which would indicate that we are trading impulsively. Okay, what I also like here when looking at, let me check at the daily chart, notice that I'm looking here at MACD at the bottom. Okay, and each time for the last year, 2 years or so, when MACD has been above the zero line, that's usually represents the bullish trend, right? When we are above the zero line. But each time when there was, for the last 2 years or so, when there was a cross in this area above the zero line, okay, you can see that there has been a pretty nice reversal to the downside on dollar index. This has occurred here in March 2023. then here in June. Then also here was the bearish cross, but this was already below the zero line, so it means that we moved into the bearish trend. But these are much more significant when you have this cross happening in the overbought conditions. So here also in October 2023, and now we are here in February, okay, where we also have seen this very nice cross. So I think that there can be potentially more weakness coming through. Also, as I said so many times, rate differential between US and Europe will define the euro-dollar moves. And what's interesting is that actually ECB is somehow much more hawkish compared to the Fed, and I'm wondering if maybe ECB could provide this trend, meaning euro-dollar could rise further. So looking at the euro-dollar, we had a pretty nice technical breakout here out of this downward channel. So first one very interesting was here in October 2023, that provides a very nice recovery, and then again this could be now in the cards. Okay, so I think that more upside could be seen. Also the Elliott wave setup suggests that we could potentially see more gains, even if we're, let's say, we want to focus more on minimum target rather than looking at too much higher levels. Keep in mind that still there is very nice, plenty of room for, even if that would be a corrective rise away from that February 13 lows, that's still room for more upside, okay, for a wave C. So I think that 109.50, 1.1, this could be a very interesting levels moving forward. Or also keep in mind keep an eye on German bunds. I posted this one on Twitter as well, and sent out our free blog post before we scheduled the webinar, and we said that of course bunds for now are still trading to the downside, okay, compared to the euro dollar, but this rate differential between US and Europe could potentially send the euro dollar to the upside. But if the US yields would really come under pressure, then even yields in Europe could do the same, but maybe not with the same degree, okay, would not be that maybe bears would not be that strong, but still this could potentially lift the euro dollar higher. So I'm thinking that treasuries are trading at very interesting support. If you look here, okay, that may be also interesting. That's continuation chart, okay. So don't be, sometimes when you have these rollovers, don't be confused by the price action. It may not show you the real picture, okay, because you have those gaps. So in TradingView, some of the assets will have these adjusted contract changes, okay, and you can see that this is now a slightly different picture. So whenever there is a rollover on continuation contracts, keep in mind that maybe it's worth to check some near-term expiration contracts like for March or maybe for June, okay, to make sure that you are focusing on the right structure, okay. This will help you to define the real correct patterns, okay. So here is March contract. You can see that potentially we can be completing this flat correction, but we are not seeing really bullish impulse unfolding just yet to make sure that we are bottoming, but potentially this could unfold in the next few weeks. So that's for dollar and euro. Now if we take a look also on pound, I have it here. Now pound really did not move much. Still, what's the most important, let me hide this, okay. What's the most important is that if you look and compare the current drop, I can do this, wait. If you compare the current drop here, okay, with the previous recovery, you can clearly see that that was a very strong move with some very clear price action here in the middle. It was a very strong move to the upside. So I think that represents an impulse, okay. And since we are now, if we just try to compare here, let me check how long we are now consolidating. Let me switch to the daily chart, maybe even better. So that's now 46 days, okay, and here we have been recovering for around 59 days. So what this tells me that in a very similar time zone, we have seen a pretty strong move to the upside here regarding this bullish sequence. So, and correction is obviously not that deep in the same or similar period of time. So this tells me that this is a correction and that was an impulse. So that's why I'm still hoping and thinking that pound could potentially see more upside, not to mention that drop clearly cannot be counted in any kind of an impulsive bearish structure. So I think that this is maybe wave 4 correction, maybe even higher degree wave 2, but in either case I think that you have to be patient here, but just wait maybe on this broken channel here around 1 to 720 to make sure that bulls are really alive. Okay, so if this 127 would be broken, then this wave 4 could be already finished down here. Okay, so that's for pound. If we take a look maybe also on Aussie still it's not really getting much momentum. It's really sideways here. I still think that maybe the sideways price action could resume here for a while for an ABCDE triangle, but in the near term maybe slightly more gains could be seen here. Watch out these levels around 65, 60. If we can pass this one, then I think that more upside could be seen at least towards the end of the week to retest these swing levels going back to January. Okay, so Aussie for now it's not really that strong compared to the euro, especially not for the last 2 weeks, but it could be setting up some bullish reversal here. Okay, also I posted on Twitter comparison with copper last time, and I just think that if the commodities will rise, that Aussie could also benefit from this. Also, if we take a look maybe on crude oil, so crude oil in my opinion still in a corrective rise. Okay, so at some point we could maybe find the resistance. If that would be the case, then we know that this could help inflation to come down, right? And maybe this will also be the reason for a sell-off on the US yields and eventually US dollar as well. Now, if you consider that this drop clearly has been made by 5 waves here from September 2023 highs to these December lows, then of course you would anticipate that market will continue in this direction after the current recovery. Okay, so this correction for now is still underway, but it's approaching some very nice resistance levels around 80 to 82. Then you have 84, 85, the 61.8%. So in this area, if crude oil is really headed into the resistance, then we should see some kind of a reversal from that area, I believe, this week. Okay, so watch out for crude oil for potential limited upside not that far away. Now let's take a look on the S&P 500. So the S&P 500 daily chart we had, and we have 2 wave counts. The first one still shows that possibly we are forming the 7th swing correction to a new high as a wave B that could be part of a very big irregular formation. But what's important with this one is that it still didn't meet its minimum requirements. Okay, around 138.6% extension of this wave A. So that's still plenty of room for more upside, even if this is a corrective rise. But of course, because the stock market is very strong, we are also observing this wave count, which shows that we are in the middle of a bullish impulse. But what's interesting about both wave counts, let me minimize this. What's interesting about both wave counts is that here we will be expecting more upside after a wave B pullback, or maybe here after a wave 4 pullback. So I think that the next retracement on stocks could still be very interesting and part of an ongoing recovery. Also, if you are our member, keep in mind that we are also updating very short-term wave counts on the S&P 500 as well. And so far we are seeing some kind of a wedge here, a potential wedge that can be forming on futures contract. So watch out and be aware maybe of some pullbacks. But we also have DAX, which so far is looking very nice, very strong, and I think that even DAX maybe itself suggests that after the next pullback, which could occur on stocks, on the US markets, we could see more upside and continuation higher. Okay. Also, if we take a look maybe on gold, so gold have seen a pretty nice move to the upside after these manufacturing PMI figures on Friday. If we take a look at the wave count here on daily chart, we are still in the middle of this potential wedge that can be forming. The reason why I came out with an idea that this could be a potential ongoing wedge is because we have some free wave structures. Okay, so it's not really looking impulsively here to the upside. Maybe it will still show up if we suddenly see a very strong break higher, but I'm still a little bit more skeptical. I think that it's much better and safer for me and for potential risk reward trades if you have minimum targets rather than some extended targets that would be, let's say, around 2,600, 3,000 or something. Of course, I will be looking for more upside on gold, but I think that 2,200, this could be the next potential very important, very strong resistance. Now, if suddenly, let's say that if we'll see a reversal to the downside, let's say that I'm wrong on the US dollar and that we will see dollar rally back towards 108, then still very nice, very attractive support on gold, of course, will be around 2,000, and below that you have 1940. Okay, so after any big sudden dip, I think that gold could potentially catch and find new buyers down there. Okay, so that's still very attractive, very interesting area. Now in the short term, however, I think that there can be more upside. I have an intraday wave count here. So after a very nice and strong push to the upside last week, we are actually seeing now tracking just an intraday impulse for this week that could extend towards 2,100, maybe 2,120, where you have this 161.8% extension of wave 1 from end of a wave 2. So this is the zone that we will be looking for, especially after this wave 4. If you are more like an intraday trader or just holding your trades for 2-3 days or so, of course this could be a next potential opportunity on the upside after this wave 4 retracement. Okay, now let me take a look also maybe on on some of the cryptocurrencies. As you know, we have been talking about bullish Bitcoin for a while, and I'm watching if I have it somewhere here. We also released the video analysis, and of course also mentioned it in our previous webinars. We were talking about the Nasdaq 100. Okay, and what we were talking back then is that this ABC decline, okay, was corrective on the Nasdaq 100. So if you have a corrective pullback on technology sector, and back then we have seen a very nice and strong break to the upside, what we assume is that even Bitcoin at some point will catch the gains. Okay, and we have seen a pretty nice and explosive move to the upside here over the last week or so. So I'm thinking that of course we are in a bullish phase and that this sooner or later will resume back to all-time highs. Of course, chasing markets right now, right here, if you're looking more for short-term setups, it's maybe you will have to be very nimble and careful. But the next pullback, in my opinion, could be quite interesting and attractive because we are in the middle of a bullish cycle here. And if you're our member or if you're watching our past free analysis, you know that we have been showing also this chart where we said how far and how long time and how much time there is left for Bitcoin to continue higher. Okay, and I still think that we are just in the middle of this latest current phase. Also, if you will take a look on crypto total market cap, let me find it somewhere here. Okay, you can clearly see that we are in a very strong impulsive rise here as well. So obviously the whole crypto sector could be doing very well. Even some altcoins could potentially be very interesting. There could be an alt season coming. Also, there was some very nice reversal higher on Litecoin recently. Let me check the live chart here, where we are tracking and looking for potential break higher. Keep in mind that we are observing very big triangle here. We are just currently sitting on this trend line resistance, maybe already trying to break it out, but I'm not really convinced yet that wave E is finished. But sooner or later, of course, I would be looking for much more upside here. Now also let's take a look on the Ripple. This one is also still waiting on this potential very strong break to the upside. You can see here that we are tracking a very big triangle for a while now, but an ABCDE triangle. I know that a lot of traders, investors, maybe some of them already gave up on Ripple, especially after this massive move to the upside, firstly here in July of 2023 during summer, and then was followed by a sell-off. Okay, when there were announcement that they won the case against the Security and Exchange Commission. So a lot of traders probably and investors gave up on Ripple, but I still think that now when there's not much of price action going on Ripple, that maybe sooner or later, but with a delay compared to other cryptocurrencies, we could potentially see a break higher and to the upside. Also, make sure to keep an eye on our free updates here as well. Now, last week we were updating this free article because we talked about Bitcoin Cash. We were looking higher, and so far, as you know, Bitcoin Cash breached $400, and I think that these kind of potential triangles are really interesting and work quite well on cryptocurrencies. Okay, so that's for cryptocurrencies. Let me check here. Dow and Nasdaq. Yes, I can take a look on them. Just a second. Okay, so here we have Nasdaq 100, as I said and covered earlier, that free blog post that we shared 2 weeks back or so. So that was an ABC drop, and you can see a very nice push to the upside. Now, if we are in a wave 5, then we know that wave 5 should be made by 5 subwaves, right? But so far, that's still not the case. That's wave 1. You have a wave 2. So wave 3 now maybe ongoing, wave 4, and then watch out for more upside into wave 5. So clearly this technology sector remains bullish and could eventually have a positive impact on Bitcoin, which is here in blue, which is very, very strong, as you can see. So I think that this one will also stay in recovery mode. Let me check what I have here though. Okay, I can update this one. Okay, so this one also, as I said earlier, there can be the potential wedge formation, top formation for the S&P 500. Okay, in the near term, maybe something similar could be building up here. But even if that's a wedge here on Dow, you still need to see at least one more push to the upside, because there is no 5 waves up yet within this wave 5. Okay, so maybe slightly more upside through the week, but then towards the end of the week, I think that we really should be careful. Of course, even cryptocurrencies, even Bitcoin could see a reversal if these stock markets would also experience some kind of a deeper pullbacks. But as I said earlier, with the S&P 500, even if we see some kind of a pullbacks, I still think that this will be just temporary retracements within a higher degree uptrend, and then the next 3 wave dips, of course, could be very interesting to join these trends, right? Okay, if you have any questions, please let me know in the chat room, or here if you're in our Slack chat room, or if you're here on watching on YouTube, please let me know. If not, then I will actually end this webinar. I will cover some and focus on some single stocks because I didn't keep eye on it last week because I was away. So definitely I will also share some of our free charts, free analysis also on Twitter. So make sure to join me there, or join me on our website. I'm sure that you will find a lot of interesting analysis that we cover. Okay. Okay, traders, thank you very much. So I hope that you will navigate this market successfully through the week. Someone is asking for Bitcoin chart. We covered the Bitcoin a little bit earlier. Okay. Okay, traders, good luck this week and talk to you soon. Bye.